Every homeowner, you need to pay attention to this. Your mortgage renewal that's coming up is about to increase in payment. It's not about variable or fixed. This applies to everybody across the board. This basically applies to everyone unless you were the one person that told me that they got a 10-year fixed at 3.5%. Good job. You know who you are. So with the fall market being very lackluster, now that we're like pretty much more than halfway through, the fixed rate mortgage is going up because the bond market's gone up. There's going to be some risk that we need to talk about for these upcoming mortgage renewals. And like, this isn't just about, call it the bulk of the renewals that are coming in 2025 that, started in the start of the pandemic. There are still mortgage renewals coming up every single year. It's just the bulk of them is for 25. So the ones that are coming up in 2024 also need to understand that there are still 100% going to be challenges ahead with the rates this high. Meaning this, all homeowners, you need to pay attention to what I'm about to tell you because it could make a big difference on how you renew your mortgage. So make sure you stay tuned. Now, if you find yourself in a pinch after understanding kind of what I'm about to tell you and what kind of challenges and what kind of headwinds are, in front of us as homeowners in this video, you can book a call with me using a link that's right here to kind of discuss, what's the best plan of action from what I'm seeing right now and kind of like what your property that you're, discussing about, right? Because everyone, like I've said this many times, because everyone's situation is very different. And if you want to chat about your specific unique situation, use the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And if you find any of this content helpful in your real estate journey, especially if you know other homeowners about the mortgage renewal that I'm about to talk about, make sure you spread this knowledge and share this video with them. And also smash the like button while you're at it and subscribe to the Prime Properties channel because I want to be able to put out good information out there in case this people need to hear what I'm about to say because it's about every homeowner right now. So mortgage renewals that are coming up are going to be pretty rough given how high the rates are right now. Now, we have not seen mortgage rates this high in a very, 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 very long time. And I'm almost certain people renewing at these kind of call it higher rates are going to be renewing higher than what they had previously. So the bulk of renewals that are coming up in say 2024, just by my guess and kind of some of the data I'm looking at, is going to be people who got like a 5-year fixed in like 2018, 2019. Meaning this, they're going to be coming from 3 to maybe 3.5% interest rates, and they're renewing currently at 6.5, maybe 6.2, depending on where we are in a bit, right? And where the renewal is. You can see most people were coming from a fixed in this chart over here. And while yes, there are some variables who wouldn't have felt this, it's a very small segment of the market because you have to remember, realistically, even the variables haven't moved, right? Unless you're with Scotia. Because Scotia is the only one with the real adjusting monthly payment. Everybody else, like your TDs, RBCs, BMOs, CIBC, I feel like I'm forgetting one. Anyways, your payments don't move. Even if the interest rates go down, you just pay more principal, right? So it's like the opposite of negative amortization. So I suspect anyone with a variable from 2019 isn't likely negative amortizing yet. So it's not that bad. So here's the challenge we're going to. Have a look at this chart. You can see that for every $100,000 of mortgage you owe at 6.5%, that's about $632 a month. So you just quickly do math. If you have $1 million, which is 10 100,000s, that means your monthly mortgage payment at these new rates, if you renew, is about $6,300 a month. Yeah, it's pretty big. Now, I put a line item for every 50,000 in case you guys want to do the math. You can just freeze the frame here, and it'll go from basically 400,000 up to 2 million, depending on the mortgage, right? So you can just pause. Now, if you're coming from a 3% mortgage, that's a $200 a month difference per $100,000 or a 50% increase. 50, right? Meaning instead of paying what it is right now, maybe $4,200 on that $1 million mortgage, you are now going to be $6,300. That's a big jump. Now, if you were in the fixed camp of 2019, 3.5, your renewal is about 40% higher in this chart here. So while I would say, most people who own their home, they should be able to handle it. And I'm not trying to spread fear. It's just that I suspect some won't. And at the same time, I suspect some people may not even know, right? So let me repeat myself from what I said before. If you are in financial trouble and you know you can't handle it, call your bank for financial assistance. You can very likely amortize, like re-amortize and stretch out your payments again back to like the maximum amount they'll give you. And you maybe help with like 5 to 10% of the payment, depending on how many years you have left on your mortgage, right? So this is your amortization schedule. This is why understanding that this challenge is super imperative. So you understand what's to come, right? Now, let me add the effed up part of the situation in all of this, because I'm dealing with this with 3 other clients right now. If you cannot show your financial hardship, you kind of essentially have to like take it on the chin with these rates, because you could be stuck, right? And let me explain what I mean by like stuck, right? And this is a really crappy situation to be in. So for you to refinance and re-amortize and stretch out your payment so that you can drop it down and not be under financial hardship, because that's an exception that banks make, you have to qualify and pass the stress tests, right? Because you're getting a new mortgage, meaning you need to qualify right now at 8.5%, which is a contract plus 2%. So 6.5 plus 2. Back in 2018 and 2019, when the stress test came out, most people were qualifying at 5.25. That's like a 3% spread. So for you to qualify for the exact same mortgage you got, more or less, okay, you may have paid down a little bit, you now need to pass the stress test at 3 whole percentage points higher. This means your income need to have increased, or your mortgage would have been paid down that much that it's that small for you to qualify for your mortgage. Yeah, it's not fun. So here's the other stuck kicker. For anyone that wants to go to the bank and shop their rate around, they also need to qualify. Meaning, if you're just like by the skin of your teeth, if that's the saying, I think it is, right? Someone correct me if I'm wrong. And like you just qualified for your mortgage 5 years ago and your income didn't go up and you didn't really pay much of your mortgage down, like, quicker payments, extra payments or whatever, there's a very high likelihood you cannot even qualify for the mortgage you have right now. Yeah. Meaning banks can and likely will be dicks and throw the above market rate at you on renewal, because you kind of have to take it and you have no other choice. Yeah. It's a pretty crappy situation to be in, but hopefully the banking regulators obviously will do something about this, even though like we're coming up to it, because as we're heading into a bunch of like renewals in 2024 and like a bulk of renewals in like 2025, this is going to be a huge challenge. Like the stress test meant to protect us could now kick us in like the groin to make it worse. Now, I have personally seen a bunch of my clients' renewal letters, and they're all over the place. Some are at market rent, from what I can see when comparing the rates. Some are above market, and I'm not even really sure why, right? So make sure you're aware and shop it around if you can. So all homeowners should be doing this math. 6.5% per $100,000 or $623 a month per $100,000 mortgage you owe. See if you can handle that payment increase as you're coming up to your mortgage renewal. That's kind of like the magic sweet spot. So I'll put the chart up here again so you can freeze frame it and you can look at it. And just understand this. This isn't about like fixed or variable and who did better or whatever. Everyone is going to feel this at some way, shape, or form, because essentially all our mortgage terms are generally less than 5 years, except for like a few 10-year products out there. So if you cannot handle the payments, see if you can get some assistance from your lender first. And if that fails you, then you have to sell. And then if that is the case, I would suggest you get ahead of it, because if this is going to be the situation, we already have a lot of listings right now, and this could add some more listings to the market that hasn't seen this many listings in a while. It just means that there's going to be a lot of pressure for prices to come down because the buyers have that much supply and the rates are so high, the buyers aren't buying, right? So if you're not certain of where you stand in this whole ordeal, you can book a call with me to chat about your personal situation. The link is right here. It's www.chatwithzhen.com. The idea of me putting this out there is like, it's not to kind of put fear, but it's to help educate other people so they know what's coming, because some people honestly just don't know, right? They don't. And as for a final note, for those of you homeowners who can qualify under the new higher stress test at like 8.5% and your renewals are up, shop around. Show your lender that you have the ability to go shop around. even if you have to go show them you have another pre-approval letter somewhere else with a lower rate, because this will ultimately mean that the banks that you have your mortgage with right now want to keep you around. They want your business. They want your interest payments, right? And the renewal business is easy. And if they know you're going to leave, there 100% is wiggle room for them to reduce the rate because they don't want to churn as a client, right? So make sure you shop around. And yes, it's a huge pain in the butt if you've got a mortgage in the past. They literally ask for every single piece of document possible, like even ask for your gift certificate. It's not gift certificate, your certificate of your child. It's going to be worth it because you can save a significant amount of money and shop it around and bring your interest rate down, right? Hopefully this helps. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?